not only in the public sector and governments, but also in the private sector, can contribute to the reconstruction of Ukraine. We will have a first reconstruction conference on the 25th of October in Berlin, together with the G7 presidency, Germany, where we will discuss with experts how to most effectively organize the reconstruction. But of course, as the European Union, we are willing to take the responsibility to organize a platform so that the different funding stakeholders can jointly come to the platform and invest in the future of Ukraine.
That was the European Commission President Ursula von der Leyen speaking to Bloomberg TV in Ukraine. Now, meanwhile, Russian President Vladimir Putin has acknowledged that China's Xi Jinping expressed questions and concerns over the Ukraine war. Now, the meeting took place in Uzbekistan, the first between the two since the invasion. Now, joining us is Ross Matheson, Bloomberg's executive editor for international government. Ross, always great to speak to you, so thank you so much for coming on. I mean, this was, a pretty amazing summit because it was the first time they met in a long time, certainly since the invasion of Ukraine. And actually, they're friends, but there were questions about what was being said behind closed doors.
Well, that's right. Of course, this is the first time they'd sat down together since before the war, of course. And it was interesting to see the dynamic out of that. Xi Jinping still called Vladimir Putin old friend. They talked a lot about mutual areas of interest, about supporting each other on the global stage because they have a vested interest in doing so. Of course, China needs Russia's backing in things and Russia wants China's backing in things, and it suits them to present themselves as something of a bloc against the US. But it was interesting to see Vladimir Putin acknowledge that perhaps China's less than happy with this war. Perhaps not the fact that he invaded Ukraine, but certainly how long it's gone on for, how messy it's gotten, and the risk that China gets drawn in as time goes on. Certainly questions that if Russia is struggling on the ground, if its economy is struggling, does China need to support Russia more economically? Obviously China would not want to be sending weapons into Ukraine, but do they get pulled into the mix? So you can see certainly perhaps a message from China, could you wrap this up sooner rather than later, for our collective good.
So, Raz, what does it tell us about, what we'll see in the next 6 to 7 months? It's also what India can do in this mix, right? And his meeting with Putin.
Well, that's very interesting because, of course, Putin is meeting with the Indian, with Modi today. And India's played a very interesting sort of neutral-ish role in all of this, despite being, of course, part of the Quad, which is this grouping with the US, sort of semi-military grouping in Asia. India's not criticised Russia heavily for the invasion of Ukraine, certainly doing business as usual with Russia in all of this, buying energy and trade and so on, and yet somehow not being criticised nearly as much as other countries for doing so. The US and others in Europe have kind of danced around criticising India for this, and that's of course because India is a democracy and it's sort of one of the gang. So it's an interesting dynamic to see Modi quite overtly now sitting down with Putin today.
I mean, we had this pretty extraordinary picture actually yesterday also with President Erdogan. What are we expecting? What does this meeting in Uzbekistan actually tell us about the anti, I guess, US sentiment across the world?
What's interesting at these things, you always look at the photos of who's standing next to who and who's looking at each other in a certain way and sort of passing it. For Intel, it was interesting because, of course, Turkey and Russia have been sometimes friends, sometimes rubbing up against each other, but having collective interests also. And as time goes on, perhaps an increased interest because Erdogan needs to get re-elected pretty soon. His economy is not in good shape. Perhaps Russia can support him in that endeavour through trade and investment. Also, Russia wants Turkey to act as a further bloc against the US. So perhaps some alignment of interest that we're seeing there, particularly between Turkey and Russia in a more overt way than we saw perhaps in the early days of the war.
Raz, the other question, of course, is what's happening with all of this money that's going to Ukraine. So President Biden pledged a lot of money. We saw that support from the European Commissioner over in Kiev yesterday. Is there a worry, though, that we're going to elections in Italy? We had the election in Sweden, that there's going to be a bit of a mess in Europe as people maybe want to be more friendly because of the energy crisis to Russia?
Well, that is the big question as time goes on, and that's perhaps where Vladimir Putin can get the most traction, right? He likes to sow disarray and confusion, and that's how he gets his influence, and he's causing that with the energy crisis in Europe. And as people look at their own economies and their own people, are they less willing to send money without conditions, billions of dollars into Ukraine in terms of aid, and also weapons, because their own weapon supplies are running low. You see that in countries including Germany, where they're saying we're running out of tanks, we're running out of ammunition. and you have to pay private companies to get more, and their economies can't afford it. So even though they're piling in weapons at the moment, and they've been really, really successful in terms of the fight on the ground for Ukraine, the question is, in another 6 to 9 months, are they still going to be willing to do so?
Thank you so much, our Bloomberg News Executive Editor for International Government, Ros Matheson, of course, across all of these very nuanced dynamics. Now let's get straight to your Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. FedEx shares have slumped in extended trading after the company withdrew its earnings forecast on worsening business conditions. The package delivery giant flagged weakness in Asia and challenges in Europe as it's reported preliminary results that fell well short of Wall Street's expectations. The warning dragged the market down on concerns about the broader economy. Now, a new report from the World Bank says the global economy may face a recession next year due to aggressive monetary tightening, which could prove inadequate in tempering inflation. The study showed that investors expect central banks to raise global policy rates to almost 4% next year. It also called on policymakers to fight inflation by boosting production instead of reducing consumption. Ethereum has completed a key upgrade of its network, marking the crypto world's most ambitious software upgrade to date. Called the Merge, the revamp makes the blockchain network more energy efficient and paves the way for it to scale up. Ether led digital assets lower after that update, dropping almost 9% in what some market observers labeled sell the news event. And that's your Bloomberg Business Flash. Francine.
Leanne, thank you so much. We'll talk a lot more about Ethereum and, of course, some of the things that we've been watching out for. Let's stay with that story. Ethereum core developer Preston Van Loon told Bloomberg that things are running smoothly following the upgrade. Well, we spoke to him shortly after the merge was completed.
So far, everything's a success. I think what we'll see over time is, do the metrics hold up? Do we continually see nearly 100% participation? Do we see consistent block finalization and a healthy network in the coming weeks and months?
You know, looking out longer term, what are you going to be watching for? Are there any potential red flags that you are going to be looking out for?
Yeah, great question. You know, with these kind of upgrades, it's really important that Ethereum stays online, right? It's a really hard thing to do. But, you know, with these upgrades, they're also so complex, right? So there's a lot of things that could go wrong. We do a lot of testing. We make sure that things are working really well before we do the upgrades. But things we're looking for, right, is making sure liveness is continued. We still have the same uptime as before. One of the cool benefits of the switch of proof of stake is that it's a much smoother blockchain. Blocks are delivered in a more consistent fashion every 12 seconds versus probabilistically every 13 seconds. So really, we're just maintaining that the software stays online, that participants are staying online, that the network is staying healthy.
How do you know when this will be successful? Obviously, the price action today wasn't all that good, and well, actually it was down today, but you did see it rising very significantly until this point overall before we really hit the crypto winter. There was a lot of excitement around this. But when do you really see the benefits of the new economy of the system?
Well, we're seeing the benefits today. The switch is immediate, right? So the energy efficiency gain that we've realized with the 99.99% more efficient model is in effect immediately today, and the prior model immediately ceased. So we already see that benefit. We see the benefit of increased decentralization. There are way more actors in Ethereum producing blocks today. In principle, Ethereum's proof of stake is working now. It is successful now, and it's running smoothly.
Ethereum core developer Preston Van Loon there on the recent merge. Now coming up, deadly floods, scorching wildfires, and torrential rains. Today's big take looks at the atmospheric phenomenon driving the weather chaos, La Nina.
It's about planet Earth. What's on the next stage?
Can't we live in a way that doesn't overburden the environment?
We need a better story. Yokogawa can rewrite it.
Don't miss that next. This is Bloomberg.
hardest thing in life, I've often said, is to be happy, but you seem like a very happy person.
It's like nature. Nothing ever stops. So you could be super happy 1 minute and then something happens. So it's just living. It's the joy of life.
For any young woman that's watching this, wants to be the next Diane von Furstenberg, what would you recommend?
I think the most important thing in life is the relationship you have with yourself. Once you have a good relationship with yourself, any other relationship is a plus and not a must. And the second advice is to be as true to yourself as you possibly can. And you have to accept and own things you may not like. But the more you could be you, the happier you will be.
Power, policy, politics. From the White House to the Hill, Bloomberg covers the leaders in legislation.
That was really a tectonic shift for this White House.
The theory of this bill, as I understand it, is there'll be a multiplier effect.
How did Democrats mobilize specifically younger voters?
Bringing you the political news you need to know.
The president has made it very clear that this is a significant focus.
For the intersection of Wall Street and Washington, nobody covers politics like Bloomberg.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, Germany is taking control of Russian oil major Rosneft's local unit as the Chancellor Olaf Scholz reacts to the unprecedented energy crisis sparked by the invasion of Ukraine. Bloomberg has also learned that Berlin is in advanced talks to take over Uniper and two other large gas importers. Now, for more, we're joined by our Europe gas and renewable reporter, Todd Gillespie. Todd, great to have you on the program. And there's so much going on. What are you working on right now, really?
What are we working on right now? Well,
where do we start?
All of these things right now, Germany is really sort of taking, really sort of getting to a point now where it needs to really start securing all of its energy supplies, like not just sort of before winter, but we're talking now into the long term. Germany said that it wants to stop importing Russian oil by the end of this year. So that means that some of these refineries that it seized control of, brought under its trusteeship is the sort of official term. That means that a lot of the oil that was coming from Russia to those places will really stop. So the chance of that getting any oil, if it's still controlled by Russia, is pretty slim. So the government is now thinking through strategically, like, how do we sustain these sort of industries further into the future? How do we secure our energy supply? And then on the gas point, you've got these huge gas companies now which have really been suffering, repeatedly over the past several months, problems with credit, problems with trading. Really, really shaken by the price swings that we've seen this year, really, really shaken by the trimming in Russian flows. And now the German government is just saying, hey, two of these companies were originally owned by Russia earlier this year, and the other is state-owned by the Finnish government. And they're basically saying, look, we need to bring everything in-house. We need to secure it how we have it now.
But, I imagine the question, and actually there's only one game in town, really, which goes to inflation, and it is 100% energy. But what's the renewables mix in this? Because you just can't replace it in time. The timeline just doesn't work.
Exactly, yeah, and that's why we're seeing Germany essentially saying to big industrial users, big power users, look, go back to coal for now, go back to coal for this winter so we can at least secure supplies over the winter, reduce your demand as much as you can. We'll sort of, they're essentially sort of putting on pause a lot of this transition for now, and in the background they're going to be trying to ramp up renewables development, ramp up stable baseload, low carbon sources like, in other countries at least, nuclear, but they're also looking at things like hydropower across the continent, hydrogen as well, and the acceleration and thinking about how these other transition fuels can help boost this transition faster once we get over this winter. Yeah. That's sort of what people are trying to think about now.
Through your reporting, do you worry that actually whoever comes in power in certain countries, the narrative will change to, well, why are we doing all of this instead of just becoming more friendly with Russia again?
I think Russia's really shot itself in the foot, according to some analysts, by essentially making itself an unreliable supply. Gazprom was someone that the German, the German infrastructure, the German government, the whole of Europe sort of saw as this linchpin of Europe's economy, and now, they're really looking inwards now. They're looking, how can we bring this supply domestically? How can we become energy independent again?
Todd, thank you so much. As always, our Europe gas and renewables reporter there, Todd Gillespie. Now, deadly floods, scorching heat and torrential rains as climate change pushes weather disasters to new extremes. An atmospheric phenomenon, La Nina, has been the driver behind the chaos. Today's Big Take says another year of La Nina could actually mean $1 trillion in weather disaster damages by the time 2023 wraps up. Well, joining us now for more on our Big Take story is our Asia agriculture reporter, Sibylla Gross. Sibylla, what exactly is La Nina? Good morning or good afternoon, and how rare is it to have 3 in a row?
Good evening, Francine. So to start with, La Nina is a naturally occurring weather phenomenon. It basically involves, it happens when the surface temperatures of the ocean in the Pacific near the equator drop just a few degrees, but that can have huge effects. It basically sparks a wave of weather patterns that can bring drought to some areas and intense flooding to other areas. It is very uncommon to have it 3 times in a row. We've only had that happen twice since the 50s. So yeah, it's a very unusual occurrence.
So what do we know about what kind of impact this is going to have? And you know, the $1 million question is, what are the places that will be most impacted? I mean,
honestly, nowhere in the world is going to be unaffected by La Nina because it affects the commodity markets in a way that is just hard to fathom and hard to quantify. So you touched on this earlier. One way to think about it is the fact that it'll cost $1 trillion by the end of 2023 in terms of insurance damages, but the other aspect to this is how it's going to affect commodity markets. So if we look at the US, California already in severe drought, that's affecting farm production, and that's the biggest farm producing state. And we've seen drought affect corn crops across the whole of the US. And if we flick down to South America, Brazil, Argentina, also both huge agricultural producers. Some of the commodities there that will be affected by the heat include coffee, oranges, and sugar. It's not just food, however. We've had iron ore mines interrupted as well by the heat. And if we look over at Australia, for example, we've had torrential floods here it's felt non-stop really, and this year could be even worse because the ground is so sodden from the previous La Ninas, and that could wipe out crops like wheat, which is much needed in the world right now, given the Black Sea crisis. So it's affecting everything.
Yeah, it does affect everything. Thank you so much for all of you. Also, great reporting, our Asia agriculture reporter, Sibylla Gross. Now, coming up, thousands have come to London to pay their respects to Queen Elizabeth II.
It's about planet Earth. What's on the next page?
Can't we live in a way that doesn't overburden the environment?
We need a better story. Yokogawa can rewrite it.
Second, the UK's longest reigning monarch. We have plenty more on the UK next. This is Bloomberg.
What do you think of when you think of a battery? For most, it's what we use to power devices for both work and play, and maybe even your car. Over the past few decades, they've gotten way more powerful, long-lasting, and affordable. But all of this is just a prologue to what the next batteries are going to do.
As we drive to an increasingly renewable power-driven grid, we also need to be able to store energy and release it later to cover those periods of weather intermittencies that are driving this new grid that we're in. It's a multi-trillion-dollar opportunity, and it's imperative that we figure out the solution here.
How we store energy on a massive scale is in many ways the central challenge of the fight to stop climate change.
When U.S. jobs numbers are released, Bloomberg brings you crucial data at terminal speed and instant expert analysis. Nobody covers Jobs Day like Bloomberg.
Queen Elizabeth II continues to lie in state at Westminster Castle as the UK remains in a period of mourning. Hundreds of thousands of people are expected to have queued for hours in order to pay their respects to the monarch ahead of Monday's funeral. Now, for more on all of this, but also some of the economic challenges facing the country, we're joined by our Lizzie Burden and our Markets Live editor, Noor Al-Ali. So thank you both for joining us. Lizzie, it is quite moving to see so many people actually queue for so long.
Indeed, it's snaking along the River Thames, this queue, even though people were told they'd have to wait 30 hours. Some of them have waited 11. And it's interesting to compare the queue to 1952 when the Queen's father died. It's almost the same images. So I think it shows just how popular the monarchy is and the outpouring of affection, respect for the Queen.
Yeah, I mean, of course, in that period, the economy has changed quite a lot. Or has it, given all the pressures that we're seeing on sterling?
Well, a really bleak day, the worst since 1985. What a landmark for the anniversary of Black Wednesday, tipped today because of the retail sales figures, worse than expected, 1.6% decline, because you've got the cost of living crisis taking a bite out of spending power.
Noor, I mean, this wild ride is going to continue, and actually it just brings me back to something that Thatcher said about the markets, how you can't get away from them, but also Mark Carney saying, look, we rely on the kindness of strangers in this country.
I don't know if FX traders would agree with that, because every FX trader today, or any trader today in the macro backdrop, is going to look at every economy and central bank and how effectively they are at dealing with inflation. It's not how much they raise rates anymore. It's how effective are those rates combined with fiscal challenges, combined with the energy crisis. And the pound so far doesn't seem to be looking, pretty much positive in that regard. Next week, though, we've got the Bank of England's rate hike decision. Hopefully we can see an aggressive tone from them that can mimic that of the Fed. And of course, we've got the fiscal support package being announced from the UK government as well.
Yeah, and there's so much, of course, going on to try and kickstart also the City of London. And I wonder whether, there's a more immediate effect coming from that.
It's a big, bold statement, isn't it, to try and remove the cap on bankers' bonuses, try and make London more attractive post-Brexit. But of course, you can debate it either way. Even Andrew Bailey has said that this is something that needs to be potentially looked at again.
We also had this great, story by John Authors. I mean, what's the prescription right now for how this government what they should look at and deal with the falling pound?
Monetary and fiscal policies need to work hand in hand. That's economics 101, and that's definitely something that the Bank of England can, heed to. They are raising rates. They are independent from the government. Those are very important factors for traders today. And you also have the fiscal support package that's going to come and help us in the energy crisis that's coming in this winter. So all of that, hopefully, if there's a fine balancing act there, we can potentially survive this in the next 6 months for sure.
Thank you both for joining us, Noor Al-Ali and our Lizzie Burden. We, of course, continue watching what's happening here at Westminster in the oldest part of Parliament. Queen Elizabeth II's coffin lies guarded by these iconic beefeaters.
It's about planet Earth. What's on the next page?
Can't we live in a way that doesn't overburden the environment?
We need a better story. Yokogawa can rewrite it.
This is Bloomberg.
Apple's delaying its next major iPad software update, iPadOS 16, by about a month from September to October. Apple made the decision for a number of reasons, including a still buggy Stage Manager multitasking interface and in order to link the launch closer to the more similar macOS Ventura. Still, it's an unusual move. Since shifting the launches to the fall in 2011, Apple has released its new iPhone and iPad software updates simultaneously each year around September. By staggering the releases, users may find some issues around compatibility with cross-device features like retracting and editing messages in iMessage, the new shared iCloud photo library, and the new feature for transferring FaceTime calls between iPhones and iPads. It will also make it a bit harder for developers to launch apps that run on both the iPad and iPhone that require new APIs and features found across iPadOS 16 and iOS 16. Regardless, it was still, of course, the right move. Stage Manager on iPadOS 16 is still quite buggy, I don't find it particularly intuitive, and it's not compatible with most iPads and many third-party apps on the App Store. The feature clearly needs some more polish. And complaints from consumers about Stage Manager will now no longer probably overshadow the earlier launch of the iPhone 14.
Lots happening on Wall Street.
I think Jay Powell said things that were indefensible.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
We think that's the next secular shift.
From businesses most influential and instrumental.
It's knocking it out of the ballpark.
It's a challenging dynamic.
This is a level of uncertainty that we haven't had to deal with.
Bloomberg Wall Street Week, live tonight with replays all weekend on Bloomberg Television and Radio.
Strong enough to stay, we will never.
Unquestionably, fundamentals for the broader economy have weakened.
When Germany starts to ration energy, it will become clearer to everyone that, oh my God, the trade balance of the German economy is going negative.
Hopefully it's a mild recession, but it does look like we're headed towards recession.
This is Bloomberg Surveillance, early edition with Anna Edwards, Matt Miller, and Kaylee Lines.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong. Our top stories today. A worrisome sign for the global economy. Package delivery giant FedEx pulls its forecast because business conditions are getting worse. Germany takes a major step to secure energy for consumers. The government has seized the German business of Russian oil giant Rosneft. And that's not likely to be the government's last move. And a rare admission of tensions between Russia and China. Vladimir Putin acknowledges Xi Jinping's questions and concerns about the invasion of Ukraine. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London, Matt Miller and Kriti Gupta in New York. Kaylee Lines is off today. And Kriti, really interesting to see the way that the market has digested that FedEx news. Kind of to be, maybe we were expecting something, but the market response has been pretty negative.
It absolutely has. But the reason for this, Anna, simply because FedEx, it's a global story. But I want to talk to you about how it translates to the Asian session specifically. Think about it. FedEx has a massive exposure to China. It's one of its massive growth markets specifically. So when you're talking about a slowing economy, you're talking about COVID lockdowns, naturally that's going to hit the Asian outlook specifically, and that's where you're seeing the ripple effects. The MSCI Asia Pacific Index down about 1.2% in the session, but a lot of those pains concentrated in China, but not necessarily in the shipping sector. It's actually in the tech sector, in the CSI 300, the Shanghai Shenzhen 300, I should say, which really is kind of focused on those tech stocks in that particular region. Those shares getting hit by about 2.4% on the session, Anna, and it's a lot of pain in the equity market, but I would argue a little bit more pain in the currency market. I'm going to pull a classic Kriti and talk FX here and talk about specifically the Chinese yuan, because we are now crossing past that key 7 level. We're looking at that 703 exchange rate, and this speaks to simply the weakness you're seeing in the Chinese yuan. Even though you have a lot of stimulus coming in from the PBOC, it's just not enough to really lift those currencies. You have the flip side of the equation when it comes to the Korean won, where you actually have strength in the Korean won after hitting 1400 yesterday. That is, I believe, a record weakness for the Korean won against the dollar. Today, a little bit of a reversal, but at the end of the day, it comes down to how some of these Asian export currencies actually hold up in this kind of lagging trade environment, Matt.
Yeah, definitely all eyes on FX today. After the FedEx warning yesterday, we had a big drop, though, in equity trading as well. Aftermarket and now pre-market, you're seeing futures down 0.9%, and we already had a more than 1% drop on the S&P to 3,900, just over 3,900. So futures are coming down even further this morning. The U.S. 10-year yield rising up a little bit as investors let go of some of that debt. So maybe conflicting risk signals there, but 346.50 is still a relatively high level. I mean, we're getting closer and closer to the recent peak that we saw, I think, at 351. The dollar index continues to gain strength against major currencies around the world. So you're seeing big time lows for the pound, as Anna pointed out, and I'm sure we'll point out in just a moment, against the euro, against the yen, against the yuan. Everywhere you look, dollar strength is persistent, and including cryptocurrencies. Now today I put Ether here instead of Bitcoin because Bitcoin is still stuck around that $20,000 level. It's down a little bit under it, but not moving much. Ether I find more interesting. At $14.57, it dropped over $100 yesterday. And part of the reason is, I guess, the sell the news effect from the merge that was completed, it seems, without any disruption. But also Gary Gensler coming out and saying, you know what, proof of stake assets may be subject to security laws. And that has to be a concern for holders of Ether. Anna?
Matt Miller replacing Bitcoin in his chart with Ether. Is this a sign of the flippening? This was a new word on me earlier. In the crypto space, I am sure everybody knows it, but this Mark Cudmore taught me earlier. This is the picture on European equity markets, Matt. Negative, really bright red across the European equity space, down by 1.7% in the German market. That's the epicenter of our concerns today. The London market doing a little better, holding its head up. It has the support of some of the more defensive sectors around energy and also around healthcare. So that's where some of the resistance comes in. Let's have a look at some of the trades around FX. Or one in particular. Matt mentioned the weakness we're seeing in the pound, a 113 handle on the pound right now. We're now trading at the weakest since 1985. On the day, 30 years to the day that we saw Black Wednesday in the UK. That was the day where many hedge funds went up against the Bank of England as it tried to support the pound at unsustainable levels to keep it in the exchange rate mechanism. Well, that didn't work out. The pound dropped out of the ERM. Today we have a totally different, but in some ways interesting to compare and contrast situation. 113.79 on the pound. Deutsche Post and Royal Mail. I put both of these in response to that FedEx news. Chrissy, this is read across basically from FedEx. So in Germany and in the UK, parcel delivery businesses feeling that same pressure of that update, that withdrawal of guidance we saw from FedEx. And Uniper, this goes some way to just nod towards the German story that we're covering today. We'll get more details in a moment, but it seems the German government stepping in to shore up supplies from oil refineries by taking over the German units of Rosneft. That's on the oil side. On the gas side, there are still conversations ongoing, still trying to do those deals. Uniper very much in focus. Critty?
Certainly a lot to watch. That FedEx story is something we're going to be following throughout the hours. I will argue ripple effects throughout the day as well. Let's take a look at what's ahead today. The Queen lying in state continues while King Charles III will visit Cardiff, Wales, where he will receive a motion of condolence and meet with members of the Welsh Parliament. Plus, it's Triple Witching Day, where the quarterly expiration of stock index futures and options, as well as single stock options, typically spurs an increase in trading and volatility. Plus, we'll get the Russian rate decision at 6:30 a.m. New York time. And it's day 2 of the meeting between Russian President Vladimir Putin and Chinese President Xi Jinping. An interesting alliance there, Matt, to watch, especially as we talk about this global slowdown.
I mean, you could say that again. It's like a global paradigm shift that we're documenting for history. Let's get to the news of the day, though, which is FedEx. It withdrew its earnings forecast last night and worsening business conditions, especially in Asia and Europe. The package delivery giant flagged weakness there in those two regions. Bloomberg's Danny Berger joins us now for more because, Danny, it wasn't just FedEx. We had a whole slew of companies over the last couple of days warning that this economy globally is slowing down.
Yeah, but I gotta say, Matt, if you are a macro trader, you're usually not really paying attention to just individual companies like FedEx. So it's extremely notable the reaction we're feeling across markets. FedEx itself, pre-market, is already down 19%. But you all just went through these markets, through these equity markets, which are taking a bath off the fact that FedEx is warning on these macro conditions. It really shows that what we saw on Wednesday, that was not capitulation. This is an extremely nervous market that's reading the tea leaves, trying to figure out the state of this economy, the state of this consumers. So things selling off pretty momentously. Now, it is also notable that the bond market kept doing what the bond market has been doing. It didn't all of a sudden say, okay, FedEx is bad, the Fed's going to pivot, the consumer isn't doing well. No, that's not what happened. We are now pricing a terminal rate of 4.5%, surging up from 4%. So the bond market understands this, that the Fed is going to walk the talk. Now it's the turn of the stock market to catch up, which is in part what we're seeing in this reaction from FedEx, that they realize that the consequences of this will be a slowing economy, slowing consumer demand. So we get things like all the companies you're talking about, Matt. We have the Port of Los Angeles, shipments there coming in, dropping the most since the start of COVID. You had retail sales yesterday that once you strip out inflation were flat. So it signals now that the stock market has to digest, and you'd expect we're going to get more company earnings that might force us to do that even further.
Yeah, definitely watching out, especially for the shippers, but also General Electric, also U.S. Steel, also Alcoa, McDonald's. So we've got, in the last couple days, really a slew of warnings, and that Port of Los Angeles story is just one more to add to the pile. Danny, thanks so much for that. Now let's get over to Germany. The government has begun what may be a series of historic takeovers to try and avert a collapse of the energy industry. Regulators are seizing control of a Russian oil major Rosneft's German oil refineries. Bloomberg has also learned that Berlin is in advanced talks to take over Uniper and two other large gas importers. Todd Gillespie, Bloomberg energy reporter, joins us now for more. So it looks like Germany is starting to nationalize Russian assets and others in order to try and stabilize this energy market.
Yeah, well, technically, this isn't quite a nationalization yet of the Rosneft unit, but it is a precedent that has been set earlier this year when Germany took Gazprom Germania, a huge subsidiary of Gazprom, the Russian gas giant, into its trusteeship. And now that is one of the companies, along with Uniper and VNG, that the German government is now actually going the full step, potentially, and taking a shareholdership of. But in Rosneft's case right now, Germany's looking forward to the end of the year where it's looking to essentially end all crude imports from Russia as a result of sanctions on Ukraine. But now it's asking, hang on, if we've got this Russian infrastructure, can we really guarantee that we're going to get the oil for it if it's still owned by Russia?
Okay, and so that explains why the Rosneft move, the taking on of those Rosneft assets by the German government. Todd, what about on the gas side then? Because there's Uniper and a couple of other businesses that you just mentioned. We seem to be talking about this, whether they'd be nationalised for quite a few days, maybe weeks now. It is complicated. I suppose that's why it's taking so long.
Yeah, it's really complicated. And in Uniper's case in particular, you've got a company that is essentially sort of 78% owned by a Finnish state-owned company.
Fulton.
So yeah, exactly. So you've got a really kind of odd, complex situation here. Also, if you think about the political implications of this, you've got the Finnish taxpayer that has essentially been sort of supporting and funding this company that has been subject to Russian domestic energy policy. So if you think about Russia's Germany's overdependence on Russia over the past few years, and essentially sort of the risk that that's put Uniper at, the dynamics for the Finnish taxpayer are slightly interesting, let's just say. And yeah, you've got VNG, you've got Gazprom Germania, now renamed as Securing Energy for Europe. Both of those are also in line for state ownership now. And this is really an unprecedented step of Germany just saying, hey, look, we need to secure all of our supplies, whatever that means, whatever it takes, really, for the German economy.
Bloomberg's Todd Gillespie, we thank you as always. Let's pivot a little bit here, talk about Russia. Russian President Vladimir Putin says he understands China's questions and concerns about his invasion of Ukraine. Meeting in Uzbekistan for his first in-person talks with Xi Jinping since the war began. Putin also slammed what he called, quote, provocations by the U.S. and its allies in the Taiwan Strait. Roz Mattson, Bloomberg executive editor for international government, joins us now for more. Roz, thank you as always. This is interesting. This is a friendship that's almost falling apart, but to what extent is it falling apart? Walk us through some of the cracks.
Well, it's interesting because it's sort of a friendship, but it's a friendship out of necessity rather than the fact they really like each other or their particular allies. It's because they have combined vested interests in working together against others. And so you see Russia and China often support each other on the global stage. What was interesting in this comment is a slight acknowledgement, perhaps, that China is less than happy about Vladimir Putin's actions in Ukraine. Not necessarily the fact that he invaded Ukraine to start with, but that 7 months on, this war is dragging
on. Russia is bogged down. It's pulling in all these other countries on the global stage, and of course keeping pressure on China from the US and others to sort of adhere to the international sanctions against Russia, even though China did not sign up to those sanctions. So of course China will never criticize Russia publicly for what it's doing, because they need to be seen to be working together, but perhaps an acknowledgement that in that meeting yesterday there was a slight expression of concern that came from Xi Jinping to Vladimir Putin, wrap this war up quickly, make sure it doesn't spread any further, because it's not actually the best for all of us if this thing drags on for months and months. And certainly the impact it's having on the Chinese economy, on trade, investment, the ability to do business with Russia, and so on, perhaps gets impacted as time goes on. So it was an unusually frank admission, perhaps, that things aren't so terrific between them.
All right, Roz, thanks very much for joining us. Roz Matheson there talking to us about the Putin-Xi meeting, and we're going to have more with Leonid Bershidsky later on in the program. Now, President Biden says the U.S. will give Ukraine as much as $600 million in additional weapons and ammunition. The aid will come from existing U.S. stockpiles. Emily Wilkins, Bloomberg government reporter, joins us now for more from Washington, D.C. So restocking the Ukrainians, so to speak.
Absolutely. And this is something that we've seen a lot of. I think this is actually the 21st time in the last year that the U.S. has dipped into its stockpiles, trying to continue to help out Ukraine as they are fending off the Russian invasion. And U.S. officials have reason to be hopeful. They have seen what Ukraine has done recently, taking back a lot of Russian-occupied territory in the northeast area of the country, in Kharkiv, and they want that momentum to continue. That's what we have heard from officials yesterday as to why these weapons are being given at this point. Certainly, you have seen a lot of support continue in a bipartisan manner in Washington for Ukraine. I think we're expecting to see that continue to a certain degree. There are some questions about exactly how funding is being spent, what oversight mechanisms there are at this point. But I think there's a sense, especially now that you are seeing Ukraine gain the upper hand in some of these territories, that the U.S. support is continued to be needed here.
Emily, stick with us for a moment, because I want to talk about the rail strike here. The United States has actually potentially averted, I should say, after freight rail companies and unions reached a tentative deal. The agreement coming after 20 hours of talks, which included President Biden himself. The president spoke yesterday. Take a listen.
Today is a win, and I mean this sincerely, a win for America. Together we reached an agreement, you reached an agreement that will keep our critical rail system working and avoid disruptions of our economy.
So, Emily, we heard comments from the president. We've heard about this kind of delayed time frame almost. Walk us through the time frame now that we hear about whether this deal is actually going to go through.
So, Grady, it is still a huge question mark whether that actually winds up happening. Now that we have an agreement between union leaders, industry leaders, and of course you had President Biden play a huge hand in that, but now it has to go to the actual unions, workers themselves. You got 125,000 individuals who are part of a dozen different unions. They're going to need to ratify this agreement, and there's just really no guarantee that that is actually going to happen. A lot of them have very serious concerns about whether or not they're going to be fired if they need to take time off for medical leave, doctor leave. We haven't seen the exact text of the agreement that was come to, but we know that there aren't any additional sick days, even though there is some more leniency on absence policies if workers need to seek medical care. And Creedy, remember too, this is a really good atmosphere right now for workers. It's a good climate. We've seen a number of very successful strikes, a number of successful unions form, and folks are aware of this, and they're keeping that in mind as they spend the next couple weeks looking through this agreement, understanding what it is, and deciding whether or not they will approve or deny it, which means we have at least a couple weeks where we're not going to be looking at a strike. But after that, I think this is still something that we are watching very, very closely.
Emily Wilkins of Bloomberg Government, we thank you as always. Let's take a look at some of the stocks now moving in pre-market trading in the United States, because it really does actually come down to some of the transportation, to the logistics story. We talked about it with the rail strike with Emily just there. I was covering yesterday all day in the field, and then overnight we get the FedEx story as well. Now take a look at those shares. They are slumping 19% in the pre-market. Analysts downgrading across the board, and this is significant for the macro picture because it's an economic bellwether. Think about it. If you are shipping, if you are moving, if there's economic activity, and then all of a sudden there isn't anymore, that's a problem for everyone. And that's really what investors on the micro and the macro are really reacting to here. But it's not just FedEx. There is a ripple effect here. Take a look at UPS shares, for example, because that's really where you're seeing some pain as well. Not down to the 19% that FedEx was, but it is down 7% in the pre-market. We should keep in mind that FedEx and UPS have had different strategies when it comes to actually tackling some of these supply chain issues. FedEx got out way in front, said we're going to hire more people, we're going to pay them more so that we don't have these supply chain disruptions. UPS tackled it completely differently. They said, you know what, instead, we are going to actually go away from bulk shippers, charge more to smaller customers, and therefore make more on the profit margins. And I would say in the long term, UPS is actually getting a little bit of that reward. But today, those shares down 7%. And you can't, of course, forget the third major player in the shipping space, which is Amazon. Amazon shares down about just shy of 3%, 2.8% lower on the day. And Amazon actually is trying to create that shipping network, but isn't quite there yet, Anna. And what's significant is about a third of Amazon packages actually go through UPS. So something to keep an eye on about the ripple effects in the logistics industry for things that are as simple as ordering something online.
Yeah, those ripples coming across the Atlantic into the European logistics space as well. Coming up on the program, we'll get back to FX. So much FX move, all of it coming really from the strong dollar. We'll talk about all of that with Valentin Marinov, Credit Agricole's head of G10 FX strategy. This is Bloomberg.
It's about planet Earth. What's on the next page?
Can't we live in a way that doesn't overburden the environment?
We need a better story. Yokogawa can rewrite it.
Make it very transparent to the shopper before they accept an order, what the order is going to look like, how much we're going to pay them, and how much the consumer is paying them. And so they can decide whether they take an order or whether they refuse it. And that's the kind of flexibility that our shoppers really value and the kind of transparency that they want.
Are you seeing a labor shortage right now? And what are you doing to combat that?
It's different in different places. Our demographic of shoppers is completely different from food delivery and ride sharing. We're 70% women and half of them are moms. And that's because a lot of the job at Instacart is very different than just being in a car with strangers. It's about going to the store, doing a good job of customer service, of really picking the right products for the consumer. And we are seeing that being very appealing to women.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller with Kriti Gupta here in New York. Anna Edwards with us out of London. We are simulcast as well on Bloomberg Radio and Bloomberg Television. For those of you listening on radio, I'm going to show our TV viewers a chart right now, but don't worry, I'll walk you through it. We're looking at volatility, which has just absolutely soared almost to the levels that we saw in March of 2020 at the height of the beginning, I guess, of the pandemic. In terms of the bond market with the MOVE index and JP Morgan's FX Vol index. On the other hand, the VIX really hasn't done much of anything. Joining us now to talk about this is Noor Al-Ali, Bloomberg Markets Live editor. It does feel like there's a lot of volatility in U.S. stocks, Noor, but the VIX just isn't showing us that. Why?
Yeah, absolutely. I think because predominantly the movement is really headed towards treasuries. That's where the central bank action is targeted towards, and that's where traders are trying to hedge against risk of aggressive monetary policy. In terms of stocks, it's a basket of things. You still have energy and investors expecting energy to outperform. We've done a survey recently on MLive Pulse that said investors are expecting to up their exposure for energy assets in the next 6 months, whereas, with bonds, it's a pretty clear picture.
Okay, and that helps London to outperform today with the balance towards energy. Noor, thanks very much for your thoughts. Noor Ali of Bloomberg Markets Live. Thanks to Noor for her contribution. And for more market analysis, check out MLIV Go on the Bloomberg terminal. This is Bloomberg.
Lots happening on Wall Street.
I think Jay Powell said things that were indefensible.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
We think that's the next secular shift.
From businesses most influential and instrumental.
It's knocking it out of the ballpark.
It's a challenging dynamic.
This is a level of uncertainty that we haven't had to deal with.
Bloomberg Wall Street Week, live tonight with replays all weekend on Bloomberg Television and Radio.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He taught himself, self-made day trader. Yeah. And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot.
In many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
No one covers the world like Bloomberg.
We have to get interest rates higher and bring inflation back to our target.
33 million people have been affected by this flooding in the monsoon.
Disruption is the whole point of a strike.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business.
It's about planet Earth. What's on the next page?
Can't we live in a way that doesn't overburden the environment?
We need a better story. Yokogawa can rewrite it.
Business Authority.
Now keeping you up to date with news from around the world, here's the first word. The economy in China showed signs of recovery last month. Industrial production, retail sales, and fixed asset investment all grew faster than expected. Meanwhile, the urban jobless rate fell. Beijing has rolled out stimulus measures to counter a slowdown. Still, a property market slump and COVID lockdowns are weighing on the outlook. In Ukraine, President Vladimir Zelensky says a mass grave has been found in a city that Russian troops abandoned last week. More information is expected today after journalists visit. Meanwhile, President Biden says the U.S. will give Ukraine as much as $600 million in additional weapons and ammunition, the aid coming from existing stockpiles. This is Bloomberg.
Apple has identified its next big business, bringing advertisements to more parts of your iPhone. Today, Apple pushes ads in 3 places: the App Store, Apple News, and the Stocks app. In the News and Stocks apps, Apple shows display advertisements. That means that third-party companies like car dealerships or mortgage lenders can showcase their advertisements just like they can on a website. On the App Store, the situation is different. There, Apple has search ads. This allows developers to buy their way into showing up higher on search results. For instance, an App Store developer can bid for the term car racing or basketball so their apps would surface above competing apps in the list of results. Apple's push into ads is a little ironic, given that its ATT, or App Tracking Transparency Privacy feature, limits the ability for Meta, Snap, and even smaller developers to generate as much revenue as possible from advertising. That's because the feature allows users to choose if they want their data collected and tracked across third-party apps and websites. Still, Apple's hoping to expand its own ads business and is planning to add search ads to its Maps app. Other areas where ads could eventually appear are on Apple Books and Apple Podcasts, along, maybe one day, with an ad-supported tier of Apple TV Plus to compete with new offerings from Netflix and other streaming video providers. I'm Mark Gurman. This is Power On.
When U.S. jobs numbers are released, Bloomberg brings you crucial data at terminal speed and instant expert analysis. Nobody covers Jobs Day like Bloomberg.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. A worrisome sign for the global economy. Package delivery giant FedEx pulls its forecast because business conditions are getting worse. Germany takes a major step to secure energy for consumers. The government has seized the German business of Russian oil giant Rosneft, and that's not likely to be the German government's last move. And a rare admission of tensions between Russia and China. Vladimir Putin acknowledges Xi Jinping's questions and concerns about the invasion of Ukraine. I'm Anna Edwards in London with Matt Miller and Chrissy Gupta in New York. Kaylee Lyons is off today. It's been a really busy week, Matt, already, of course. We look ahead to a week from a financial markets perspective next week that will be dominated by the Fed. Before that, we've got a bit of data.
Yeah, we have a bit of data, and it's pretty negative, certainly for equities after a classic bellwether warning from FedEx. This brings us back to like Dow theory days. If shipping is bad, the economy has problems ahead. S&P futures down 1% right now, and the cash trade closed down more than 1% yesterday. So we fell down to 3,900 on the S&P, and it looks like today we could go even lower. We do nonetheless have investors selling off bonds. This is basically acknowledging their acceptance of the fact that the Fed is just going to keep hiking rates. So now the 10-year yield getting closer and closer to the recent peak of 351. It's at 346.50 right now. The dollar index rising against most major currencies, pushing the pound down to the lowest level since 1985, weighing on the euro, on the yen, on the yuan. So dollar strength really prevalent in the market today. And then, yes, I did replace Bitcoin with Ether. Trust me, you're not missing much with Bitcoin. It's still around $20,000, a little bit less, but it's not really moving that much. Ether, on the other hand, was $1,600 yesterday, and it dropped $100 after Gary Gensler said that the SEC may consider Ether a security as it switches to proof of stake from proof of work. And of course, that switch, the merge that we talk so much about, which is really an ongoing thing, but it kind of went off without a hitch yesterday. So maybe it kind of a sell the news moment for Ether and for some other cryptocurrencies as well. Critty, what do you see in terms of pre-market movers?
Well, I love that you mentioned Dow theory because it's actually, I think you taught me Dow theory back in the day. What I think is interesting here is we talked about it in context of the rail strike. You're talking about transportation names like Norfolk Southern, CSX, et cetera, which could actually move the entire index given that they are the Dow Transport's heavyweights. So are the likes of FedEx, UPS, Amazon. That's where I want to go with our pre-market movers today because that's where you're seeing a ton of the pain. No surprise here. FedEx is that global bellwether. If you have economic activity slowing down, you are going to see that ripple effect across the world and really become this like early high frequency indicator that things are not going in the right direction. So FedEx really giving that vibe on the micro and the macro basis, down about 19%. UPS not far behind, also down about 7%. The idea that if FedEx is down, UPS will be as well in sympathy. So is Amazon, though. Remember, a good chunk of Amazon's kind of business is creating a shipping network. It's logistics at the end of the day, something that they are trying to expand into. A third of Amazon packages are transported by UPS, so they're not 100% there yet, Anna, but still certainly suffering by that ripple effect, down about 3%.
Yeah, and we're suffering the ripple effects here in Europe as well. It's certainly something that's weighing on sentiment. We have the stock 600 down by 1.2% as we go towards, well, almost get towards the middle of our session here this Friday. The pound under pressure, as Matt said, down to levels we haven't seen since 1985. And today marks 30 years since Black Wednesday in 1992. So that's an interesting parallel to think about today. 113.84, we're down by 0.7% on cable. And this is the read across. This is one of those ripples across the Atlantic. So from that news out of FedEx, we then lead to more negative conclusions around DHL, which is owned by Deutsche Post. So the Deutsche Post share price down by 6% in Germany. And Uniper, sticking with Germany, a gas importer, down by 9.7% today. Ongoing headlines about whether the German government is going to do a deal to nationalize this business and others in the gas supply space. They are already buying up oil refineries that were previously Russian, taking those into German state control, Matt.
All right, we'll continue to focus in on that story because I just think it's fascinating and really an historic move that Germany is starting to grab assets from Russia. I mean, that's serious wartime climate. And then, of course, other assets it's got to take over because the energy market looks like it's on the verge of collapse. Now, FX has been affected by that just as much as any other asset class. Let's talk about it with Valentin Marinoff, Credit Agricole head of G10 FX Research and Strategy. And Valentin, talk to us first about the effect that the energy shortage has had on FX, because I hear analysts and investors who normally only move in the currency space all of a sudden citing gas reserves in Germany.
The latest developments are only highlighting the fact that the global commodity terms of trade supply shock that has been driving the FX markets for most of this year has now become even more important. And essentially, there are winners and losers to those developments. Clearly, commodity energy exporters, among them the dollar, I should add, certainly benefiting from that, where at the same time at the receiving end, really the commodity energy importers. For a long time this year, that has been the Japanese yen, but clearly, really more recently, third quarter, the euro, even the pound, if you wish, had to bear the brunt of that adjustment. But above it all, I think what this all adds up to is, it's kind of extending the reign of King Dollar, because where the dollar is supported by the recent commodity price developments, it also benefits from superior liquidity, and I have to say, fairly credible push by the Fed to raise rates, real yields, in the US as it fights cost push inflation.
Is there any bear case at all for the dollar, Valentin? It always makes me kind of nervous when everybody is on the same side of a trade.
Well, I mean, there is plenty of reasons, at least on my side, to believe that the dollar is certainly the rally may be running out of steam a little bit in coming months. Valuation is one point which I like to highlight. Usually positioning is yet another one. It is the case, however, that what's driving the dollar at the moment, certainly driven by two big positives. I've mentioned the Fed, and I believe that a potential peak of the Fed hawkishness in the coming 3 to 6 months, we think that the Fed will be done hiking either later this year or indeed in the first quarter of next year. That could ultimately also pave the way for the correction lower in the dollar. The other support, however, which is inherently difficult, more difficult to predict, is risk aversion. And at the moment, a dollar cash deposit, right, is the safest thing on earth. And it's difficult to say when that's going to change.
Difficult to fight that then. And the casualties of the strong dollar are all over the place. But here in Europe, it seems common to pick on the pound. And the pound down with a 113 handle right now, Valentin. The lowest since 1985. Yes, on the day that we talk about 30 years since Black Wednesday, which even if you don't remember, even if people were not trading then, it was certainly a period that in economic history in the UK goes down in legend. I mean, how weak does the pound get from here?
Well, I mean, I guess 110 is one potential level to the downside in the case of cable. Euro sterling, we are very much inside a historic range, which could see us trading to as high as 90 at some point. In that, I think that what investors should be looking at is really things like the spread between the real rates in the UK, real yields, and those same rates and yields in the US and indeed in the Eurozone. Because what's happening at the moment, really as a result of the commodity terms of trade developments, all of that has given rise to what you would call a currency war in reverse, where central banks really want to support their currencies, but essentially they're doing that with a varying degree of credibility. And obviously the Fed is the most credible in that. US real rates, real yields are certainly on the rise. In Europe, we are seeing that more recently after the July policy and the September policy meeting. But in the UK, it's really the lack of credibility of Bank of England's hawkish stance, which is reflected in the super low, super negative.
Even though they started hiking early.
Well, that's the thing. Essentially, you compare the nominal rates with inflation expectations, and from the market's point of view, essentially for the time being, the Bank of England's policy stance is simply not credible enough.
You mentioned currency intervention or currency, I say, war in reverse. I'm wondering about currency intervention. Is that something that's on the table for any of these countries?
Well, clearly, I mean, in the G10 space, the Bank of Japan has been one of the more vocal, really kind of central banks when it comes to expressing their discomfort about the weakness of their currency. When it comes to actually intervening in the markets, we think dollar yen is very close to what you could describe as the line in the sand for the Japanese officials, Ministry of Finance, and ultimately the BOJ. We believe that highs in excess of 145, 147, which is the historic high from 1998, really could ultimately force the BOJ, the Ministry of Finance in Japan, to conduct a unilateral FX intervention. It should be mentioned in that the best that the BOJ would be hoping for in this extent would be to slow down, to really stall the sell-off of the currency rather than ultimately engineer an uptrend for the Japanese yen.
Valentin, thanks very much for your time. Valentin Marinov, Credit Agricole, Head of G10 FX Research and Strategy. Fantastic day to have an FX specialist on the programme, given all of the moves that we're seeing in FX. Coming up on the programme, a rare admission of tensions. The latest on the meeting between Vladimir Putin and Xi Jinping.
It's about planet Earth. What's on the next page?
Can't we live in a way that doesn't overburden the environment?
We need a better story. Yokogawa can rewrite it.
And what it means for the war in Ukraine. That's next. This is Bloomberg.
Markets are preparing to close, but the day is not over yet.
Stock that is now up about 45%.
A lot of volatility right now.
You need the power of the Bloomberg terminal to get you market-moving data before anyone else.
These numbers are much higher than expected.
Upgraded today to overweight.
You need top analysts to bring you exclusive global insight into cross-asset markets.
The muni bond market.
China is a really big focus.
Bitcoin ain't playing along today.
It's going to be short term.
Bloomberg Markets, The Close, weekdays on Bloomberg.
The sanctions are working. We see very, very clear effects on the Russian economy. And I think that is really important. And the latest steps, of course, to disconnect the financing of the war, that is what is important. That is what to be achieved with the sanctions. And I think Europeans are willing to do quite a lot.
European Commission Executive Vice President Margareta Vestager there speaking to Bloomberg. Now, Russian President Vladimir Putin says he understands China's questions and concerns about his invasion of Ukraine. Putin is visiting Uzbekistan for his first in-person talks with Xi Jinping since the war began. The Chinese leader called Putin an old friend and highlighted the strength of ties between Beijing and Moscow. Nonetheless, it is fascinating that Vladimir Putin has divulged this information. Leonid Bershitsky, Bloomberg opinion columnist, joins us now for more. Leonid, it's so interesting that Putin would show, in a sense, this weakness that one of his strongest, only allies is questioning his ongoing war in Ukraine. What do you make of it?
Well, I think it would be hard for Putin to deny that Comrade he had questions about the invasion, because the invasion is clearly not going very well, and Russia has just suffered a serious strategic defeat in the Kharkiv region. So obviously, any allies that Putin has are asking questions about whether the war is already lost or about to be lost for Russia. And that, of course, is especially important for China, because if Putin wins this war, the Chinese will definitely feel freer to undertake something in Taiwan. If he loses, that becomes a much harder proposition. So therefore the questions, and there's no point in hiding that the questions exist.
Leonid, the concern for the West has always been, the U.S. doesn't want to get into this in terms of boots on the ground because we don't want to start a nuclear war, right? Russia still has the ultimate damaging capabilities. Shouldn't we be afraid that as the Russians do worse in this war against Ukraine, they will consider using those weapons?
Putin's main claim of power is his recent reputation for strength, which is suffering quite badly in Ukraine now. And to maintain his reputation as a strongman, Putin is increasingly called on to make drastic and unexpected and harsh moves, both in Ukraine and domestically. So obviously the worse Russia is doing on the front lines of conventional warfare, the greater the danger of something completely unhinged, like a tactical nuclear strike. So, I mean, this is a danger that cannot be completely discounted.
And in terms of those failures that we're seeing Russia suffer, the defeats that they're suffering, Leonid, how much of that message is getting through domestically, and what do you make of the domestic reaction?
The domestic audience knows quite well that the defeats are taking place. Even on state television, which is completely Kremlin-controlled, there is discussion, and relatively open discussion, of the military setbacks. And then there are the nationalist telegram channels that have been allowed to operate quite freely. They have hundreds of thousands of subscribers and a very wide reach. So the domestic audience knows that the war is not going well. The consequences of this are not clear yet, because the support of the military operation was passive even to start with. Now with the setbacks, people are basically waiting how the plotting and scheming in the higher echelons of power is going to play out after these defeats.
Plotting and scheming, I mean, where does that take us, Leonid?
Well, there's obviously a discussion of whether a weakened Putin really makes any sense as leader anymore. And so obviously the people who are preparing to make a succession play are there, and Putin's isolation and the small size of his inner circle make it kind of easier to hatch these plots behind his back.
Leonid, what does that mean for his alliances when it comes to China, to India? It was something that was, I think, almost made a strength in the early days of the war, the idea that he was able to rally this kind of international support. Why is that still not a major plus?
Well, that support that he received from China and India mainly amounts to non-interference and some discounted energy purchases. Neither of these two large countries is supplying anything in terms of military aid. The diplomatic support level is not higher than it was before the invasion. Xi and Putin declared at the beginning of the campaign that there were no limits to their friendship and their alliance. But you can clearly see that the limits exist. Otherwise, there would be visible Chinese military help and a greater involvement and certainly a greater resistance to Western sanctions against Russia. Now Chinese companies are basically, many of the Chinese companies are in line with the sanctions.
Nonetheless, it does look like we've seen a paradigm shift as a result of Putin's invasion of Ukraine. Do you think we're witnessing a new world order here? Is Russia, China, India, Iran the new, axis of evil, so to speak?
Well, Russia and Iran are much more allied during this campaign than Russia and China and India. Iran has been supplying drones to the Russian military, which were used for the first time in the last few days in southern Ukraine. This Iranian kamikaze drones were dropped on the town of Nikopol. So there, an alliance actually does exist. The cooperation with India and China is of a much looser variety. So I wouldn't really call this a real axis in the sense that, Germany, Japan, and Germany's European allies were an axis during World War II.
But Leonid, how much of that depends on this kind of economic reliance on defense specifically? You mentioned the drones in Iran. India is the largest customer of Russian arms, and Russia is, I believe, the second largest defense. India has the second largest defense industry in the world after the United States, of course. How much of that is what's tying all of this together?
I think the orders that the military, the Russian defense industry is receiving from overseas are going to shrink as a result of this operation, because Russian weapons were tested in combat against Western weapons, and they haven't really impressed anyone who's been watching. So the sort of the military industrial might of Russia is on the decline, and obviously Russia needs a lot of what it produces for the campaign. So its export capabilities are not the same as before the invasion. I think the invasion has been immensely damaging to the image of Russia as a major military and defense industrial power.
Leonid, thank you so much for your thoughts today. Leonid Bashidski, Bloomberg Opinion, joining us there to talk us through those relationships between, Russia and China and beyond. Coming up later today, an interview with Max Baucus, former US ambassador to China. That is at 12:30 p.m. New York time. This is Bloomberg.
stronger that moment that you're lifting the barbell. You get stronger as your body is making repairs, making recovery. Recovery is a when and how you get fitter, faster, stronger.
Recovery technology includes everything from massage guns and foam rollers to compression boots, hyperbaric chambers, cryo chambers, infrared saunas, and even infrared pajamas. And athletes are partnering to become investors to take those products mainstream.
When you look at tech in sports right now, it's completely innovating the way training's going, completely changing the way recovery's going. I think sky's the limit as far as where it can go.
But while some of these products can feel amazing, it can be difficult to differentiate between what really helps the body and what just tricks the mind.
Every time you're chasing the latest, greatest, newest tool, you're probably chasing a mirage.
Power, policy, politics. From the White House to the Hill, Bloomberg covers the leaders in legislation.
That was really a tectonic shift for this White House.
The theory of this bill, as I understand it, is there'll be a multiplier effect.
How did Democrats mobilize specifically younger voters?
Bringing you the political news you need to know.
The president has made it very clear that this is a significant focus.
For the intersection of Wall Street and Washington, nobody covers politics like Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Preeti Gupta with Matt Miller in New York and Anna Edwards in London. There's a lot to watch, but for me, top of mind is all about the rail strike. Of course, we know the midnight deadline has come and gone. We have been waiting to see whether this tentative agreement by President Biden is actually going to get passed by some of the union membership. And right now, we're looking at a waiting period about 3 to 6 weeks, something that's baked into the fine print. But Matt, there is a market reaction to this, isn't there?
Yeah, absolutely. I mean, I did think that we'd see much more relief after the tentative agreement to the strike, but it really has brought attention to the trannies, as they were called back in the day, the Dow Transport Index. And we used to always look at that, I'm quite old, as a gauge to see how the broader market was trading. It was called Dow theory, and Charles Dow invented it even before I was born. But take a look at the sort of new versus old Dow theory. Dan Curtis, our producer in London, pointed this out to me. I look at the transports versus the Dow Jones Industrial Average. He looks at the SOX index, the Philadelphia Semiconductor Index, versus the S&P, which is the blue line here. For those of you listening on radio, the blue line is coming down much faster and in a more extreme way than the white line. So maybe that's the new Dow theory, and maybe that's what we should be concerned about. But it does look like, especially after FedEx, that the transports are rolling over.
Absolutely. That is something that is very much a market focus. I should mention, of course, going into the weekend here in the UK, we'll be preoccupied by preparations for the Queen's funeral. This time on Monday, we were bringing you the build-up to that important state event here in the UK. And the Queen lying in state will continue all the way through the weekend. Surveillance will follow this programme, though. This is Bloomberg.
Should we anticipate that you will have regulations clarifying what the SEC is going to do on cryptocurrencies and related kinds of things in the near future?
It's pretty clear that many of these tokens may be securities. What we've asked the trading platforms, the lending platforms, the other various venues to come in, to work with us, to get registered under the securities laws, because if a platform has 50 or some of them 500 tokens on their platform, probabilities are they're not all non-securities.
Now, there's another issue that has arisen, which is called gamification, which is to say people are making a game out of trying to buy stocks. Are you worried about this phenomenon?
We live in the 2020s in the new digital age where applications on our phones can use massive amount of data and then predict our behavior. What do we do when the digital algorithms are maximizing for the company's revenues rather than our returns? And so we're trying to think that through. It's not just gamification, it's a little bit more than that. It's whether there's a conflict between the app and our investment returns.
Strong enough to stay, we will never.
Core inflation keeps rising, keeps surprising.
The Fed's going to lose its case to keep raising rates, maybe sooner than we think.
We're still leaning towards 75 just because I'm not sure Powell wants to do shock and awe.
I think the bigger issue maybe for the Fed, and they won't talk publicly about it, but it's the strength of the dollar.
If you start to push back against a strong dollar, you're effectively saying the Fed should be hiking rates as aggressively. That is a problem in itself.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
What a messy market. Live from London for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Equity futures lower, yields higher. TK, that dollar a whole lot stronger.
Need to put it in scale right away. It's correlated move. The dollar's there. Jane Foley to come up will be authoritative on this. What's important, John, 200 business days of the year. This is one of the 5 most correlated grim days. Guess what? I heard it from FedEx.
Yields up at the front end for 7 straight days. To TK's point, companies starting to come out and warn about the environment too.
They're worried about the slowdown that they're seeing in activity and the slowdown in business confidence. But just to put that scope, that scale and scope for the 2-year yield, it's risen 1 full percentage point
390
since the end of July. That is basically increasing by 1/3 for this benchmark
And
rate.
now we're talking about 4% potentially. Deutsche Bank and Matt Lazzetti, thank you, Matt, for reaching out yesterday. Rates at 5% close to next year. That's their call now.
4.9% is the terminal rate, but the market is not that far away. Right now, the market's pricing in 4.5% by March next year.
Fed funds up, Tom. Mortgage costs, you've seen that? 6%.
Yeah.
6% on average on a 30-year
Let's
mortgage
talk about
now.
the real ramifications here, not the fancy financial stuff we'll talk about all through the day. 6.2% on a mortgage. I did some of the math off bankrate.com, and here's the math. You need a much higher income to make your housing dream happen, and you're not going to get it, so you're going to rent. What's that going to do to rents nationwide?
What's it going to do to growth, Bramo? What is it going to do to rents? You've brought that up. If you can't afford to buy, what do you do? And what's going to happen to shelter costs over the next several quarters?
Move to London.
Move to London. Is that a solution?
That's the reason why he's particularly
I think we
aware
need to
of
have a little look at sterling to explain why TK is thinking about a move
We'll
to
get
London.
there. And actually, that's actually an incredibly important story. But to that rent picture, it will increase rents in the short term. This has been the issue because people can't afford to buy, so it increases demand on the rental side.
And pause, a moment of silence for pound sterling. TK, 113. 113.
Let's pause here. We make jokes about it, folks, but John Farrow did a 28-hour day the day of Brexit. This is not where sterling was when you were announcing Brexit.
And you were somewhere else having a drink and a lot
I was a real estate agent.
I'm
looking
aware.
for-
We've talked about that a few
It's
times.
Knightsbridge.
This took out the lows of Brexit. This took out the lows of the pandemic. We did that in the last week or so. We took out the lows of the last week or so. Now we're talking about 113. And all of a sudden, once again, looking ahead to the Bank of England next week, we've had 75 from the Fed, set to do it again next week, 75 from the ECB. Do we get 75 from Governor Bailey and this central bank around the corner?
And will that help? right? I mean, will that really support sterling that's responding to an economic backdrop that's really questionable? And I have to just note that this break beneath 114 is coming on Black Wednesday, 1992. The anniversary of that is today, and that really highlights where we are full circle.
We're going to sit on that story. Do you not remember that, Tom? 1992?
That's when the Bank of England abandoned the effort to
referred to as Black Wednesday,
TK.
What do you refer to it as? Soros and Druckenmiller Day?
Yeah, this Stan Druckenmiller did a great job on that. And we got to get to our esteemed guest, John, but where do you start the data check? Where do you start?
I'm going to start with yields, up at the long end and at the front end as well. 2-year yields higher for a 7th straight session. We went through 360, through 370, 380, 390. A 10-year that's threatening to take out the highs of the year, 347 on a 10-year, up a couple of basis points. Yields up, dollar stronger, euro dollar negative by a third of 1%, 99.70. And futures, Bramo, futures down 1% on S&P.
Yeah, and there's a real reason why. I mean, if you take a look at real rates, also real yields, and I know that Tom has been really on this, it's climbing to the highest since 2018. There is not a big argument for why there should be a great deal of optimism right at this moment with peak hawkishness, if we are at peak hawkishness. All right, today is day 2 of China's Xi Jinping and Russia's Vladimir Putin meeting. What did you call it, John?
Peak Bramo.
A meeting of dictators?
The convention of the dictators, and Tom said that was too mean. I thought it was accurate.
All right, well, yesterday, Vladimir Putin said that he understands Beijing's questions and concerns about the Ukraine invasion, which was actually pretty interesting, considering that they hadn't really shown public disagreement. It's clear that China has had some problems with Russia's approach. And so this really raises some questions, and I'm watching this particularly closely. 8:15 a.m., this is going to be a great interview. Colombia's finance minister, Jose Antonio Ocampo, is going to be joining us here on television and on radio. How do they deal with a dollar that's this strong? And the World Bank raised this alarm. This is one of the biggest issues. What does this do to the rest of the world? This is a huge concern, and I want to hear how different central banks around the world are thinking about this. And at 10 a.m., we get University of Michigan Sentiment Survey for the month of September. Remember when it used to be University of Michigan Sentiment Survey Friday?
And we ignored it.
Well, I mean, we're ignoring it now, right? It's not necessarily going to be that significant, but we're expecting it to increase. Sentiment's getting better. Is that a good thing?
I don't think it changes anything for the Fed next week, does it?
Well, but if their sentiment improves, doesn't this actually just give the Fed more confidence to go in harder?
Was that a story yesterday with claims? Claims at, what was it, 213?
Yeah, just dramatically lower than people had expected. The labor market
better as well.
Yeah.
Implied by lower. Anyway, Chn Foley, head of FX strategy at Rubber Bank. Long week for all of us. Will we get on for the next 2 hours? We will get on along with Chn Foley, I can guarantee you that. Head of FX strategy at Rubber Bank. Jane, the significance of a 113 on sterling. Can we start there?
Well, it's very significant, as Lisa talked about, 1992 and sterling being forced out of the ERM. And, you know, when thinking about that story this morning, the first thing that came to my mind was the current account position of the UK. Because if you've got a current account deficit, and don't forget, the UK deficit as a percentage of GDP is right now at record levels. It's much worse than it was in 1992. But if you have a deficit, really you're exposing your country to more of the whims of non-domestic investors. And if they do not like the fundamentals that they see, your currency is going to adjust lower. Now, right now, I think that's something which has been happening to the pound, for a while. The market doesn't like the growth story, it doesn't like the Brexit story,
right.
and it doesn't like the fact that the tax cuts that are coming from the new Prime Minister could really push the public finances into numbers that people just don't like. So sterling is vulnerable, and that current account position really exposes the UK. Now, of course, a lot of the story is dollar strength, but there is certainly sterling weakness in here. And one thing that we did see earlier in the year is interest rate hikes couldn't pull the pound out of the hole.
To Lisa's point.
To Lisa's point, will a 75 basis points move offer that much protection? Well, some maybe, but not all.
Chris Giles, the FT, with a brilliant short essay pulling the United Kingdom back to, I believe, 1972-74, and Mr. Barber, the complete failed plan then. Is this Chancellor of the Exchequer going down in flames with a growth model that's undoable?
Well, certainly the market is extremely sceptical. I mean, he's been talking about a growth target for the UK at 2.5%. Nobody really expects that can happen. So you're talking about tax cuts, which will give a bit of a boost. But actually, what investors want to see are measures that are going to improve, productivity and growth and potential output, not just a quick fix from tax cuts. So investors are sceptical, and that is what the government is facing, and that is what the government today appears to be ignoring.
It's a sterling story. It's a Chinese yuan story. There are specific stories about weakness, but on the other side, it's very much a dollar story, especially as we're pricing in such high potential Fed funds rates next year. What is your sense of when things break, of when the stronger dollar creates weakness that becomes hard for all of these other central banks and these economies to get out from under?
I think you could probably already argue that the strength of the dollar is already pushing half of the economy, half of the world economy under the bus. It is very, very difficult, and I think we see this already for a long time in emerging markets. So many interest rate hikes there to try and protect their currencies. Look at just Korea this week.
Plaza level?
Well, you see, I don't think that's particularly logical, because if you have a central bank putting up interest rates, you've got to say, well, a strong dollar is a byproduct of that policy. So why then come in on the other hand and say, well, we're going to weaken this currency? It's not logical. So maybe we were talking about some sort of plaza thing maybe next year when the Fed is confident that it has got inflation under control. But
is there a negative feedback loop that you can think of from the rest of the world into the US economy that the Fed has to respond to?
I don't know whether the Fed has to respond to it, because after all, the Fed's primary objectives is domestic inflation and domestic employment. Should it address it? I don't know. That's another question. But certainly there is a feedback loop into the US dollar, because as the rest of the world weakens, as emerging markets weaken, people tend to buy the dollar.
Yeah.
And so if you're buying the dollar because the strong dollar is worsening the environment for the rest of the world, you've got this feedback.
It gets more buy-in.
Absolutely. So what is going to break it? I think it's only going to break maybe next year when the Fed thinks, you know what, we can calm down on this. We've got a handle on medium-term inflation expectations.
Until then, let's talk about some levels and squeeze this in. Cable sterling against the US dollar 113, euro dollar in and around parity, dollar China through 7. Are you thinking of some big moves from here, or is this kind of it?
I don't think it's it yet. We're thinking 95 on euro dollar. I mean, we've got a horrible winter to come for Europe. Yeah, energy price crisis, rationing. Is that all priced in up? I think perhaps not. Have we got an Italian election? Will the far right get in? That's perhaps the next potential trigger for the euro in just a few weeks' time. On cable, our target now is 109. People are out there talking about parity. Can we dismiss that? No, I don't think we can dismiss it. It's not our target, but it depends very much on the US dollar. So these are still nasty numbers to come, and right now, I think the dollar strength will sustain until you can honestly answer the question, well, what else are you going to buy?
For the best part of 10 years, I think it's fair to say foreign exchange was kind of boring, and it's not boring anymore.
No.
Not at all.
No.
Jane, great to catch up. Jane Foley there of Rabobank. What a moment, hey guys, to have a serious conversation about parity on cable. Not to say it's going to get there, but the fact that's part of the conversation in a way that I don't think it's ever been a part of the conversation. Euro dollar at 95, and people hear that and they're like, yeah, sure, I'm used to those kind of numbers now.
It's 90 of Jordan Rochester that gets people's attention, Tom.
And as Jane Foley said, this goes back to Major in 1992, which is a chart I look at all the time. The timeline here back to where we are, Lisa mentioned 2s, 30s, back to 2000.
The 2's looking at 4%. I think what we're witnessing now, and Joe Weisenthal, I think it was, out on Twitter, who said this, just the end of the zero interest rate policy world getting absolutely obliterated in the last 12 months.
And it's really messy, and it probably is going to get messier, and that's really the feeling.
Andrew Sheets on that of Morgan Stanley, who'll join us in the next hour, live from London. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. The economy in China showed signs of recovery last month. Industrial production, retail sales, and fixed asset investment all grew faster than expected. Meanwhile, the urban jobless rate fell. Beijing had rolled out stimulus measures to counter a slowdown. Still, a property market slump and COVID lockdowns are weighing on the outlook. In Germany, the government has begun what may be a series of historic takeovers to try to avert a collapse of the energy industry.
Regulators are taking control of Russian oil major Rosneft's German oil refineries. Germany is also nearing a decision to take over Uniper and 2 other large gas importers. More than 100,000 workers will decide whether there's a new labor agreement with U.S. railroads or a strike. They will vote on the tentative deal reached on Thursday. The agreement increases wages and includes a compromise on sick days. A timetable for the voting hasn't been released. It's a potentially worrying sign for the global economy. FedEx has withdrawn its earnings forecast due to worsening business conditions. The package delivery giant pointed to weakness in Asia and challenges in Europe. FedEx is taking immediate steps to cut costs, including parking some aircrafts, cutting workers' hours, and closing more than 90 FedEx office locations. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
I'm going to name a couple of your babies. I don't know if I'm asking you to choose amongst your children, but some of the most recognizable buildings by you, of course, the Millennium Bridge, London City Hall, the Reichstag, and the Great Court British Museum. What was your favorite project to do?
The Reichstag does stand out because, first of all, it's an energy manifesto. So it transformed something that was dependent on fossil fuels. It uses all the technology to produce something which is essentially carbon neutral. And as a public building, that's a statement. It's a symbol of a city, it's a symbol of a nation. It incorporates works of art. It's recycling an existing building, which, as I mentioned earlier, is the ultimate in sustainability. If you can give a new life to a building, it also creates public space at the roof level. It's the most visited parliament in the world, so it puts the public above the politicians who are answerable to them. And that, of course, was made possible by the politicians. So it's a demonstration of democracy in action.
Welcome to the world of decentralized finance.
I'm going to take a look right here at regulation.
We are seeing digital currencies under some pressure.
Bloomberg's covering all things crypto, the people.
I want to have some of my money outside of the sovereign.
The transactions.
It all comes down to the details here.
And the technology.
How does that affect disruptors like you?
What happens to everything that you're investing in when the last Bitcoin is mined?
Bloomberg Crypto, Tuesdays.
You will put a woman on Mars. You will bring forth global cooling. Because when you subscribe to Bloomberg, you won't just get news. You will get insight into limitless possibilities. Before you change the world, Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
All eyes are on the Fed.
The Fed has more work to do.
75 basis points seems to be baked in.
How quickly do they get to the terminal rate?
How long do they hold them there?
Chairman Powell's going to have to read the same speech twice.
Trust Bloomberg for the fastest coverage and exclusive analysis.
Is the consumer buoyant?
The dollar is a great place to hide.
The U.S. are going to overdo it.
Investors just have to hold on to their hats.
With special commentary from former Fed Vice Chair Richard Clarida. Bloomberg Surveillance. The Fed Decides. Wednesday on Bloomberg, your global business authority.
Today is a win, and I mean this sincerely, a win for America. Together we reached an agreement, you reached an agreement that will keep our critical rail system working and avoid disruptions of our economy.
The President of the United States, live from London. This is Bloomberg Surveillance, and here's your price action. It's messy out there. Futures down 1% on the S&P 500, down on the week, down on the day. In the bond market, yields up another 2 basis points on a 10-year, 346.69. This dollar a lot stronger off the back of yields, which are much higher. Euro dollar 99.70, negative a third of 1%. Pound sterling, a 113 handle. If you've been away from the market for a month, welcome back. A 113 handle. This came from Michael Hahn over at Bank of America. I think he wrote this just for Lisa. This is what he said. Yes, it's fashion week for nouveau Uber bears, but inflation shock ain't over. What do you make of that?
Well, look, I do think that there is this feeling that right now everybody is waking up to the possibility of much faster rate hikes. And that has been the theme of this entire week. And really the question, and we keep repeating this, I sound like I'm just a repeat here, a broken record, but this idea of, yes, Tom, actually, no, I'll leave it there.
It's fire and rain.
So it's wind and fire.
Wind and fire.
But the question is, I'm just going to keep going, whether we have fully priced in the weakness in earnings, what we saw from FedEx, that comes along with higher rates and a Fed dead set on crimping some of the momentum.
I'm going to push back and go to the stock market, which Emily Wilkins cares about. And John, this is about a growth scare coming off the FedEx announcement, particularly for our international audience, including in London here. FedEx is a foundational company on the spirit of America. It's almost, John, a nominal GDP proxy. And that announcement is what tilted this market to further Bramo-like action.
Which I know, Tom, you follow super closely. And something we've all watched this year is rates snap higher and equities snap lower. And Mike Wilson of Morgan Stanley, his world now, TK. Mike Wilson of Morgan Stanley has been saying for a while.
It's a very Wilson
We
day.
move from the rate shock, you move towards the earnings shock. And Tom, people will be asking whether this headline is the beginning of that story.
Thank you, Qantas, for putting that up. FedEx down 20%. What else do
brutal
you
in
need
the
to know?
pre-market. Absolutely terrible, Tom.
Yeah, let's do this. Let's bring in Emily Wilkins, Bloomberg Government. We're going to rip up the script here as we can. Emily, every president, and particularly Republican presidents, understand the stock market, the market in general, is a huge political item. Do Democrats and does this president care about the stock market?
Biden does care about the stock market. I think when you say the stock market, that can go to a lot of different things, right? What presidents care about are what Americans care about. What Americans care about is exactly how much money they're spending. Are they spending more money than they're taking in? Are their raises matching up with inflation? Right now, that's really not the case. Democrats know it. Democrats know it's a problem. The CPI numbers this week were not good for them. They've been trying to avoid it by talking about the low unemployment numbers. They've been trying to avoid it by talking about low gas prices. But the fact of the matter is, any hope that they had last month that we were going to see inflation come on down before the November midterms really seems to be slipping away at this point.
Emily, into this difficult weekend, and certainly in London, we see a Bank of England independence tested by a new government, the Truss government. Revisit the independence that Jerome Powell has right now. What is the strength of the Powell independence?
I mean, at this point, President Biden has been very, very conscientious to try to make sure that agencies that have traditionally operated in an independent manner do so. If you remember, his predecessor liked to get a little bit more involved in those regards. But Biden's really tried to say, hands off here. We trust in Jay Powell. We're going to let him do his thing. Remember, he did get reelected to the position with bipartisan support from senators. And so he is in a bit of a strong place right now as far as operating, as far as what he he is able to do. Certainly there's a sense, at least with Congress and the White House, is that there's really only so much they can do to bring prices down and make major shifts in the market. They can pass bills that have names like the Inflation Reduction Act, but in reality, a lot of this is out of Democrats' hands right now. And so they are relying on the Fed. They are hoping that they are going to be able to provide that soft landing that's been talked about.
Emily, this White House has a very difficult message to sell at a time, especially after yesterday, where they were celebrating unions and they were celebrating collective labor agreements and the idea of getting higher wages. And then on the flip side, this concern about how high inflation is. And to Tom's point, questioning whether the Fed has to curtail that and what their role really is in this. How is it being borne out in public sentiment when it comes to the whole union negotiations and the push for organized labor?
Well, certainly there's been a big shift in how labor is being viewed. You have a worker shortage right now. The advantage is a lot of the times with the workers and with unions. You've seen that in Starbucks. You are seeing it in rail. And I think we need to make sure that we're putting a little bit of asterisk on the whole rail debate. Yes, union leaders and industry leaders did come to an agreement after a 20-hour marathon session, but we're not done yet. The workers have to approve it. We've got 12 different unions. We've got 125,000 workers. And not all of them are going to be happy with this agreement. We already know that it doesn't have any sick days, even though it does have some more flexibility for a leave of absence if someone needs medical care. But this isn't exactly everything that they wanted. And I think there is still a question mark as to whether or not we're going to be facing a similar problem in a couple weeks from now if a lot of these rail workers do not agree to this, to what was hashed out by union and industry leaders.
Emily Wilkins, thank you. Down in Washington, D.C., the world's attention, the financial markets will turn to Washington, D.C. and the Federal Reserve in about a week from now. We're going to catch up with this man right here. I have to say, I'm really excited about doing this.
Yes.
We'll get the Fed decision, and then straight afterwards, you'll hear from former Vice Chair, Richard Clarida, on Bloomberg Surveillance on TV and radio after the decision. And Tom, we go one better. If you can go one better, he's going to join us after the news conference.
Yeah, it's very generous. Very
cool.
Time. This is very important. This is the former dean of Columbia Economics. He is a first-rate monetary pro with tangible published research. He and a guy named Gertler own the high ground, John, on the mathiness of a thing called DSGE. He's an authority on what they got wrong and what they need to do to fix it.
And Tom, the beauty of the last 12 months of Bramo, we've shared this opinion, I know, is that when you're a former Fed official, you seem to speak your mind just a little bit more than the current Fed officials.
Will he go full Bill Dudley, right? That's the question.
I don't know about that.
Are we going to start to see, 5% interest rates and that they're far behind and they're living in fantasy land? Are we going to get that kind of conversation from him? Or will we get a more deliberate, nuanced, Fed-like talk about restraint?
Are you worried that we might go in that direction?
I'm just telling you.
I would say off of his academics, what you're going to hear is they have only one path, and that is data dependency. They have to wait. And they're getting it this morning.
Matt Lazzetti on that data dependence, Tom, over at Deutsche Bank. And by the way, Matt's going to open the show with us next week. We'll keep returning to his call.
Yeah.
4.9% on Fed funds next year for them.
That's
the
base
peak.
case. Yeah, exactly.
And as you pointed out, this market's not too far away.
That's the shocking thing. How much have we repriced the rate risk? What are you doing, Tom?
And that's sending stocks lower.
Richard from Pimco said play a song.
Down 0.9%. Is that rich or is that wind and fire?
It's wind and fire.
make it very transparent to the shopper before they accept an order, what the order is going to look like, how much we're going to pay them, and how much like the consumer is paying them. And so they can decide whether they take an order or whether they refuse it. And that's the kind of flexibility that our shoppers really value and the kind of transparency that they want.
Are you seeing a labor shortage right now? And what are you doing to combat that?
It's different in different places. Our demographic of shoppers is completely different from food delivery and ride sharing. We're 70% women and half of them are moms. And that's because a lot of the job at Instacart is very different than just being in a car with strangers. It's about like going to the store, doing a good job of customer service, of really picking the right products for the consumer. And we are seeing that being very appealing to women.
Lots happening on Wall Street.
I think Jay Powell said things that were indefensible.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
We think that's the next secular shift.
From businesses most influential and instrumental.
It's knocking it out of the ballpark.
It's a challenging dynamic.
This is a level of uncertainty that we haven't had to deal with.
Bloomberg Wall Street Week, live tonight with replays all weekend on Bloomberg Television and Radio.
Live from London, this is Bloomberg Surveillance, and here's the price action. Lower on the equity market, down 0.9%. Yields higher on a 10-year by 2 basis points, 346.89 on a 2-year. Up again for a 7th straight session. That's the 2-year. 10-year yields are higher for a 7th consecutive week. That's interesting to me, 346.89 at a time when so many people lined up to say the highs in June were the highs of the year. I wonder how many people, Lisa, want to take a nibble at that 10-year if we get back to 350, and we came close a little bit earlier.
There still are a number of people who are saying that we're close to the highs, but there are a greater number of people starting to raise questions about what kind of structural inflation there will be and whether the central banks will have the conviction to get back down to those target levels of inflation.
So yields up across the board and sterling weaker, the dollar stronger. Take a look at Cable 113. Citi out in the last 24 hours speaking to the team here at Bloomberg and making the obvious point, but I'm sure it will resonate with many of you. You can't buy fixed income because the Fed is hiking interest rates. You can't buy stocks because they're tightening financial conditions. And the only thing seemingly for many people to buy, Tom, is the US dollar and to stay in cash. Sterling, 113.92.
And retail doesn't have that. The people listening and watching here that are just worried about retirement plans, where do you hide? And one of the themes of the last 2 weeks is this idea of scale. There's no place to scale to. You've got a few choices, and that's it.
So the consensus view is everything we just said. Is it time to lean the other way, or are you worried about your head getting ripped off?
Exactly.
And Michael Hunt of Bank of America was saying just that. Like, sure, it's consensus, and yes, our fund manager survey says all of the above, but we think if you make new highs on yields, you're going to make new lows on stocks.
You put it really well. We're watching regime change. We're putting things into a new regime where rates are going to be high, where we have debt that is pinpointed to some of these low rates. And you cannot make these sorts of just move against the consensus kind of bets on their face.
Your weekend study, folks, quickly here. Consider West Texas Intermediate. It's $79 a barrel. We're not there yet, $85
now, sure.
But we're getting there rapidly, something for the American audience. Right now, on Europe and its impact on America, Sandra Philippin joins us, chief economist from the Netherlands with ABN AMRO. Sandra, thank you so much for joining us this morning. I want to talk about the rate flexibility that Europe has, given a dramatically different animal spirit, nominal GDP than America. I don't buy the template. Powell can do 75 beeps, then Lagarde can do 75 beeps. They're not the same economies, are they?
No, not at all. I'm glad that you mentioned that, actually, because sometimes that's a bit overlooked. So what we're seeing in Europe is an energy crisis that is clearly still intensifying. What we're actually expected to see in the coming months is that there's going to be a fall in real incomes that we haven't seen in decades. And And that means that GDP is already expected to contract from the third quarter and then on to the fourth and into 2023, and at a much deeper level than the US.
Right.
And of course, the fundamental driver of all this is also very different, because this is an imported energy inflation that is driving the whole problem. And so the room for the ECB and basically the arguments that it's having are also very different. At the same time, it does result in indeed a very steep hiking path, and I guess there's no way around it.
Right. Sandra, one of the things I find, and this is my chart of the year, is nominal GDP set in US dollars for US, Europe, and Japan, and basically Europe's flatlined since 2009. Is there a risk here, even if it's at a more elevated level, of Europe getting into a eurosclerosis of 10 and 15 years, where it's not assumed a number of years down the road they can get a late 90s pop, that will not occur?
Well, that's actually a very complex question, but I think that what a risk that we're seeing indeed is that we might actually look at a Eurozone economy which is getting into quite a tight recession, but at the same time is not going to have the recovery, for example, that we saw after COVID. So it might be kind of a slumpy period after that as well. And then, of course, all the dangers around stagflation and all that is coming to mind. That is clearly a risk. It's not our best case.
You said that you expect a deep recession both in the Eurozone as well as the United Kingdom. What does that look like when it comes to unemployment rates?
Well, actually, unemployment rates have been rather low in Europe and actually also in the UK. So one of the issues that we're basically facing is an economy at its capacity constraints. And that is also part of the inflation story. So if you think about, the trade-off between trying to tame inflation while trying not to cause a recession, well, one thing you could say is that if there's any moment where a recession, the pain of a recession is in a sense limited in terms of people getting unemployed, it's now, because we're having overheated labor markets, at least in the UK and in the north of Europe. In the south of Europe, it is a difference. So that's in Europe always a concern that there's this periphery and core different dynamics going on.
Well, to that point, how high can the ECB raise rates before it becomes a real problem when you watch the Italian yield, when you watch the Spanish yield, when you watch the Greek yields?
Yeah. We think now that that the 75 basis points in September will be followed by 75 in October, and then potentially another 50 in December, and that will mean we will be at around a terminal rate of 2%, and that then will be the peak. But of course, the risks of spreads widening is huge, and right. Therefore also the ECB has introduced this kind of new instrument. Yeah.
Sandra, what is the strength of core Europe theory as regards the ECB? How linked is Germany to the Netherlands, to Austria, etc.? How tight is that linkage to a Bundesbank heritage?
In terms of ECB policy, do you mean, or do you mean in terms of the economy? Yeah.
ECB policy.
Well, you can clearly see that the hawks have taken over at the ECB, right? So, if you look at the distribution of hawks versus doves, then definitely there's a hawkish tilt going on. At the same time, I think the arguments are the arguments would be going in the same direction whether you're a hawk or a dove. So this inflation situation is so extreme, you just have to hike. There's no way around it.
Sandra, wonderful to catch up. Expecting another 75 basis point move. Here was me a few months ago thinking maybe the full rate hiking cycle from the ECB would amount to about 75 basis points, and they've gone in one go. That's the change we're talking about.
It's just amazing. We used to think of a 25 basis point rate hike as radical. Now a 75 basis point is basically base case, and now people are talking about a 1% rate hike, and then others saying, hold on a second, you guys are moving too quickly and could break something, and this is sort of the real tension.
To some of the conversations we've had in the last couple of days, do they become overcome by events off of a FedEx announcement, off of some, as we talked to Sandra about Dr. Philippin, off the idea of a run rate of sluggish GDP where everyone's like, yeah, I'm modeling out 2 years, we're going to see a lift. Says who?
Well, Tom, let's go based on their forecasts. They're not forecasting a recession. So if you want to talk about overcome by events, maybe overcome by reality might be the story for this ECB, because every other economist we're speaking to, can you think of anyone right now not forecasting a recession apart from the ECB?
No.
In the Eurozone?
No, I think that's a really good point. And even the CEO of Deutsche Bank, right, Christian Saving, came out and he said, sure, obviously there's going to be a recession, and the ECB comes out and says, no, it's good.
The change we've seen, Lisa, at the front end in Germany, I think has been remarkable. At the 1st of August, if you go back to the chart, you're looking at 27 basis points maybe on the first trading day of August on a German 2-year. German 2-year right now, Tom, 159. That's 5-6 weeks later?
Yeah.
That's a lot of work done at the front end of the yield curve, not just in the States. We've talked about the 2-year Treasury, but on the Bund as well.
Very important on a lovely Friday in New York and around the Wall Street world. The pros worry about the calculus of it, the rate of change and the rate of change of the rate of change, and those right now are grim. I'm more optimistic, but the fact is the calculus right now is really ugly.
And that's why I was glad we had Danny Blanchflower on yesterday from Dartmouth. We could have predicted the tone that he would take, but he's getting increasing company. It's not just, for example, the likes of Jeff Gundlach, who came out and said that he actually prefers that the central bank, the Federal Reserve, raise only by 25 basis points. But you're seeing the World Bank come out and say, this is going to break the world. There will be a global recession because of what's happening. And these are some of the questions. Where do you go if you have to be a faith-based? And what the reality is saying is that inflation is hot and things are still going along just fine.
How far away are the October meetings of the IMF? It seems like months from now. I
agree with you. I mean, this Federal Reserve meeting has felt like it's taken months to get to. We're all waiting for a couple of CPI reports, a couple of payroll reports.
It did take.
And the question many people are asking, and I think we have to get better at asking our guests this question too, is this Fed being emboldened by a lagging indicator, the labour market?
I think that's a great question. Are they being emboldened right now by a government also that's basically saying inflation is at the forefront? And that's why I keep saying, if consumer sentiment hangs in, doesn't that embolden them further, right? Even though this is a lagging effect of when some of these interest rate hikes start to take effect in the actual economy.
Well, I tell you, if we get more strikes, consumer sentiment's not going to hold up for much longer in this country anyway, and it's rolled over pretty aggressively already. In the UK, Tom, a headline just moments ago, rail drivers at 12 rail companies, Tom, on strike from October 1st. So we talked about how it's all going to pause for a period of mourning in this country, and then it's back. It's back to business, and the business ain't great.
Thank you so much for bringing this up. Yesterday, I believe it was, it's a blur, folks, when you're traveling, but I believe it was yesterday, was the first day I felt like the middle 70s in at least 40 years.
It doesn't repeat, but it rhymes.
It rhymes, exactly. That was poetic.
I know, isn't it nice? A bit like Wind and Fire in that original song.
Should we play James? Let's do different James when we come back.
We've got the rights to play that music.
I don't
Just
know.
figuring it out in real time.
I called it.
That's literally what we do every
It's the floor manager Sarah asked straight away. Have you got the rights for that?
Someone's
the governor of Florida's going to
welcome to the program.
The governor of Florida is going to fly me to the vineyard to talk to James.
Tina Fordham's going to join us shortly from London. This is Bloomberg.
They're having too much fun. Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. In Ukraine, President Volodymyr Zelensky says a mass grave has been found in a city that Russian troops abandoned last week. More information is expected today after a visit by journalists. Meanwhile, President Biden says the U.S. will give Ukraine as much as $600 million in additional weapons and ammunition. The aid will come from existing stockpiles. A retired federal court judge has been named as special master to review 11,000 documents seized at Donald Trump's Florida home. The special master has until November 30th to complete the review. Meanwhile, the judge in the case has refused a government request to use documents with classified markings in a criminal investigation. In Europe, new car sales rose for the first time in 13 months. Registrations increased 3.4% in August. Mercedes-Benz was among the best performers with a 16% rise. But the good news for many automakers may not last long. Record inflation and unprecedented energy crisis threaten to discourage buyers. Apple is counting on upscale shoppers to make the latest iPhone a hit when it goes on sale today. The iPhone 14 lineup reserves the best features for the high-end Pro models, costing at least $1,000. Now, based on pre-order sales, that strategy is working. Consumers have turned the most expensive new iPhone into the most popular version. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
Our planet is facing
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He was a day trader. He taught himself, self-made day trader. Yeah. And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot.
You know, in many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
No one covers the world like Bloomberg.
We have to get interest rates higher and bring inflation back to our target.
33 million people have been affected by this flooding in the monsoon.
Disruption is the whole point of a strike.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
Strong enough to stay, we will never.
very supportive of the idea of an oil price cap in general for Russian oil. We are working on amending the sanctions package that is required for this new proposal, and we know that we have to be fast on that one. And of course, sanctions always need unanimity.
Ursula von der Leyen there, the European Commission President, live from London. This is Bloomberg Surveillance. Your equity market healing just a little bit, but still down, negative lower by 0.75% on the S&P 500. Yields higher by a couple of basis points on a 10-year, 346.89. Euro dollar negative 0.2% and 99.80. A couple of things to pick out. The 2-year, the front end of the Treasury curve, through 390. Earlier on this morning, I'm getting used to saying it, Lisa.
I know.
Getting used to saying sterling at 113, the 2-year at 390.
So yesterday, Tom kept saying, "When do we start playing the 4% 2-year?
We're here.
Is it going to be for 390?" And we're here. Wait, and this was one day. Yesterday, you were like, "We're not there yet." Today, it's we're there.
We're playing 4% for funds over at Deutsche Bank.
Yeah.
We're going to give you more data today, as we always do, but particularly I want to frame again 200 business days of the year. This is one of the 5 days. It's truly ginormous. And I want to mention, John, what hasn't moved, which is yen hasn't moved. It's locked out of fear that they may actually do something about their busted auction policy.
They have to do something about that yield curve control story.
But, you know, I'd extrapolate out yen ought to be 145.46. It's not. It's a 143 level just because of the effect of the
You think
policy.
we're getting to that point where it starts to bite?
Yeah, I think. Yeah, okay. I do. I think on this Odd Friday, we welcome all of you worldwide, and of course here in London on a most somber week, and we move to the funeral of the Queen on Monday as well. Right now on international relations on the Shanghai Five, Tina Fordham joins us, founder geopolitical strategist of Fordham Global Foresight, and this could be a 1-hour conversation. Tina, I'm going to distill it into the Shanghai Five. And then there's the Moscow One. How lonely is Vladimir Putin into this weekend?
It's been awkward for him, right? I mean, I think the image that captured it for me were the leaders of the Shanghai Cooperation Agreement standing, and Putin standing a little bit on his tiptoes.
I do that all the time. I mean, I can say.
Well, you know, this is the leader who took his country into a special invasion, massively miscalculated, and is now starting to feel not only blowback and setbacks on the battlefield, but almost incomprehensibly for Putin, who's been in power for so long now, calls for his resignation. Usually when a leader goes on a foreign trip, it's to, you know, it's a photo opportunity, it's an opportunity to distract and deflect and take some nice photos. And Putin ends up looking a bit apologetic. Russia ends up feeling like a kind of a vassal state to China.
I sensed from the serious tone you're taking, you think this is more than just a diplomatic dance. Can you think of the immediate policy implications from something like this?
So this is the kind of thing that is important for market participants, but not a game changer, right? It's you know, diplomatic mood music. We're in a period, an inflection period, right, whereby there is a rebalancing. If you are Turkey, certainly if you are China, but also other countries that weren't represented at the Shanghai Cooperation Agreement, like India, Saudi, South Africa, Brazil, etc., you're watching to see what China does with Russia, how Russia fares in terms of the costs that are imposed for this conflict, because any kind of a sense of a new revival of the old Cold War non-aligned movement is looking pretty bad now that Russia has taken such a pasting. Yeah.
Although there is a sense that Vladimir Putin has been backed into a corner, and what's the consequence going to be with the whole Ukrainian conflict? Will he go harder in other areas? What does he do to save face if he's willing to stand on his tippy toes? The image that you basically put. What's the policy implication of that? What are the potential ramifications from his position currently?
Well, this idea of a, you know, a kind of an authoritarian leader with nuclear weapons being backed into a corner is a very concerning scenario. When we look at Putin's past behavior, and remember that he's taken Russia into conflicts in Syria, in Georgia, and now in Ukraine, well, twice in Ukraine, he does tend to double down. But most of the military strategists that I talk to don't think that he's likely to use a tactical nuclear weapon. The shorthand is TNW, or maybe a chemical weapon. But we see all of this activity, shelling around Ukraine's nuclear plant, and so the risks of an accident are there.
How concerning is it that there was some sort of meeting of minds about Taiwan, from Russia backing China's vision of Taiwan as part of that nation? How does that sort of affect your view of what's likely to play out there?
Well, as we sort of talk about hard power, soft power, signaling, all this international relations terminology that's really in focus here, the attempt is clearly to signal that the powers assembled there support China's one China policy, including Taiwan. Now, behind the scenes, a lot of military intelligence types think that what China has taken away from the way that Russia's fared in the Ukraine conflict is it needs to move sooner rather than later in Taiwan, because that window of opportunity, if indeed there is one, is narrowing.
You are one of the few that truly have a transatlantic understanding and are encyclopedic on the international relations of the United Kingdom. Charles III today will travel to Wales, as he's traveled to others, 1,500 miles, I'm told, just in the last number of days. How united is this United Kingdom under Charles III?
Well, you're here at a fascinating time, right? And I'm a dual U.S.-UK citizen. I've been here for 20 years, and so I have that thing that immigrants have, kind of seeing things in more than one context, which is really helpful. I have to say, though, I'm an analyst and not a kind of a monarchist or an anti or anything else. And I look at this as through my U.S. political science hat, and I see that the U.K. has something that we don't have in the U.S. right now, where we have low trust in all institutions, from the media to the Supreme Court. Only the military, U.S. military, is trusted. You can, parse the support for the monarchy amongst different age groups, but even a majority